Today we have 4 interesting topics I want to cover. First, we're going to start off with the auto production market and how the likes of Tesla and other companies are being impacted. Next, I want to take a quick look at Apple and how they're slowing down productions of one of their phones and not for the reasons you think. Next, I want to take a quick look at Spotify. They are testing some new features due to a new acquisition and what that means for user growth. Finally, this can't be an episode without me talking about semiconductors, so I want to do a closer dive of how cell inventory is sold for multiple years for the semiconductor industry. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a free Discord, free newsletter, and a lot of great investing links. Alright, so the first company I want to take a quick look at is Tesla, and we can see from the yearly chart, investors, I want to say, should be pretty happy with their results. And for those investors somehow timed it perfectly and purchased on March 14th, so about 2 weeks ago, you are up about 42% in 2 weeks. That is insane. So congratulations to somebody who bought on March 14th. So Tesla recently has gotten hit with a few good news and a few bad news. The first bad news I want to say is Tesla has been forced to idle productions at Gigafactory Shanghai again. The reason for it is there has been a surge in local COVID-19 cases. The automaker also shuttered the plant for 2 days in mid-March due to virus resurgence, right? So it's not the first time this month, and unfortunately, it might not be the last time. Tesla has also been in talks, and numerous investors have been excited that Elon Musk is kind of discussing a stock split so he can start to pay some form of stock dividend. Let me know, are you someone who's excited about getting some form of dividend from Tesla? That is another reason why we've kind of seen some positive action in the stock price. You just say stock split and people get excited, but now you say stock split plus dividend and it becomes a 42% winner. But kind of going back into the auto production market, we can see here in UK, car production fell 41% in February, the lowest levels for the month since 2009. And unlike Tesla, where they're kind of shutting down for COVID reasons, the reason here being is the overall lowness of semiconductors. Another interesting mark here is that this is again just for UK vehicles right now. A quarter of cars produced in February were either hybrid or full electric vehicles. We can even see more reports here that General Motors will pause productions of its Chevy Silverado and GMC Sierra at the company's huge Fort Wayne, Indiana factory in early April. Production will resume after 2 weeks. The reason, obviously, global shortage of microchips. And I just want to say, with news like this, if we are investing in companies, maybe not just auto manufacturers, but companies that provide solutions for the auto industry, that there can also be some trickle down slowness from there. I want to thank the Motley Fool for sponsoring this video and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service, so what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. Alright, the second company I want to take a quick look at is Apple. And if we take a quick look at charts, again, investors are very happy to be owning Apple for at least the past year, and it's definitely provided strong returns. Right now, Apple is reportedly already cutting iPhone SE production plans by 20%. And for those not familiar with the iPhone SE, this is their introduction phone to the iPhone series. It's actually the phone that I have right now. According to a report from Nikkei Asia, Apple will be making 20% fewer iPhones SE in the next quarter than it originally planned, and 10 million fewer AirPods for all of 2022. The reports don't point to supply chain issues or chip shortage, which have plagued much of the electronic industry, as a reason for Apple walking back in production plans. Instead, they cite lower than expected demand for Apple's latest budget-focused phone. And in my opinion, that's probably the best move, because the budget series, in my opinion, I who own the budget phone, I'm not going to go there every single time there's an update to it and purchase the new version. The reason I purchased kind of the entry-level phone is to save money. And for that reason, Apple is kind of slowing down productions. All right, the next company I want to take a quick look at is Spotify. And if you are a Spotify investor, you're probably not as happy as the last two stocks we've seen. We can see Spotify right now from all-time high, from 52-week highs, is down almost 50%. But Spotify, I mean, if we take a look at numbers of Spotify's premium subscribers worldwide, they continue to grow. Look at this every quarter. Quarter 4 of 2021, they had about 180 million paid subscribers. And that doesn't seem to be slowing down at the moment. So with Spotify, I want to talk a little bit about a recent acquisition they made last summer, and that is they purchased Pods, which is a podcast discovery platform that they purchased last summer for roughly $49.4 million. So Pods, the main attraction for Pods was that it helps users find or discover a podcast that they might like to listen. So this is obviously a great case because Spotify has been spending a lot of money on getting content in forms of podcasts to their platforms. But what's the point of having all this great content if you're not able to kind of provide your users with the taste that they want? So Spotify has just recently started testing a feature that leverages this kind of technology to help users find new podcasts they may like. Again, this is still in testing phases right now of them integrating the two technologies, but I do believe if this is successful, it can overall provide a stronger kind of consumer experience. All right, so the final article I want to take a quick look at is one that really caught my attention and obviously has to hit with the semiconductor news. We can see right here, silicon wafer prices are expected to increase by up to 25% by 2025. So for those not familiar with silicon wafers, these are the materials needed to kind of produce chips. So who uses silicon wafers? Those are usually the manufacturing company. One is mainly known as TSM, Taiwan Semiconductor. One I really enjoy a lot and kind of adding my position into recently. TSM, they use these wafers to create chips for the likes of companies like AMD, like NVIDIA, and all these other players. Unfortunately, right, TSM just uses these chips. There are other companies above that TSM purchase their chips from. For we can see the main wafer suppliers for TSMC semiconductor companies are, for example, Taiwan's Formoso's Sumco Technology, Taiwan's Global Wafers, Japan's Shin-Etsu's, and there's numerous other players. So remember, we have TSM as the one who creates these chips, but they need to buy the material from other players. So according to China Times, 12-inch wafer prices will rise past the 200 level for the first time ever in 2024. Obviously, these are analyst projections, but 2024 is not far from here. And something that I found interesting is right now we are seeing kind of an increasement of money being spent for manufacturing companies, right? TSM is focusing on building new plants. Intel is focusing on building new plants, right? Even though we're seeing an increase from those companies, the companies that I mentioned that create the wafers themselves don't really have an expansion plans that align very closely to chip makers. So even though we are seeing an increase of maybe these manufacturing plants, the material needed is still kind of maintaining in its own course. And that seems pretty interesting, and it can kind of push me to be a little bit more understanding that this semiconductor shortage can last even longer than some people expect. For example, Taiwan's Global Fair, a major contributor to the industry, has pre-sold all of its wafers through 2024, says China Times. It also heard that Japan's Shengo has its wafer output fully sold up to 2026. So again, this just tells me that the overall semiconductor shortage is kind of gonna be here to stay for a little bit longer than most people expected. At the same time, I do believe that this is going to show revenue increase in a lot of companies. Obviously, if TSMC, right, a manufacturing of chips, is paying more for their equipment, they're going to end up charging more for their services as well. So we're going to see the companies like TSMC increase revenue. I think that the most important thing for companies like TSMC is that instead of just looking at revenue growth, we also have to see things like net income growth and earnings per share growth. Here, we can take a quick look at Taiwan Semiconductor Manufacturing's revenue for the past 5 years and Taiwan Semiconductor's net income. In the past 5 years, their net income has increased about 92% and their revenue has increased 84%. So it tells me that, hey, even though the company might be seeing an increase in expenses, they are following so to make sure that their net income is either outpacing that revenue growth or doing even stronger than that. So I think this is pretty good for the semiconductor industry. As a semiconductor investor myself, I do believe this kind of production halt is still going to be there, especially that we see wafer companies are not kind of aligned with the overall growth that we're seeing with the manufacturing companies. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.